What's up, everybody? Thanks for coming back to the channel. Today we're going to be talking about leasing and some ins and outs and nuts and bolts of leasing. What is a residual? What is a money factor? Why are the payments cheaper when you lease a car versus buying the same car? Nobody understands this stuff, right? We're going to break that down in this next video. We're going to get started right now. Welcome back to the channel, guys. Now, before we get right into the leasing thing, just give me a second to introduce Marcus. Marcus has joined our team. He's been with me now for 2 years, but he's going to start showing up on the videos because we're growing our hard-earned knowledge brand, and Marcus is bringing a lot of valuable info to the table. So, Marcus, tell them a little bit about yourself before we get going on this leasing info.
Thanks, Ronnie. Yeah, I'm happy to be a part of the Hard-Earned Knowledge brand and move this forward. I've been working here at Auto Search USA for 2 years. I love what I do. I love being a broker, and I love being able to help people find that perfect car. But I'm also a big entertainment guy and big YouTube guy. I have my own podcast that we talk about Formula One and stuff like that. So I love bringing sort of a new side of expertise to the table when we're trying to grow and trying to help people learn some new topics.
And he's very humble. His podcast just got sponsored by an energy drink company, so it's pretty cool.
Yeah, very exciting. Very exciting. We're blessed to have a sponsor, and we're very excited for this opportunity, and we're very excited to grow and move on and move forward and do bigger things with that as well.
Well, thanks, guys, and thanks for being with me today as we go through these topics. If you want to check out Marcus more, if you're into F1 racing and motorsports, The Backseat Drivers is the name of his YouTube channel, so check him out. All right, guys, let's get right into it. So we're going to talk about a couple of things, like 3 specific things. What is the residual? What is a money factor? How do those 2 things work in a lease? And we're going to talk about why are lease payments normally cheaper than buying the same car, and we're going to bring in some examples later on in this video. So when you're talking about residuals, let's start there. Residual is, what's the definition of it? Let's bring it up on the screen. So guys, if you're taking notes, a residual is simply the guaranteed value of the vehicle at the end of the lease. So it's if you make it more difficult than that, it becomes a little confusing. What do you think about that?
Yeah, no, absolutely. I mean, if you try to explain it in further detail, I'm sure we'd completely confuse almost everybody out there. But yeah, in the gist of it is, when you're leasing, you have typically a 3-year term. And at the end of that term, the residual is what the car is worth at the end of that lease term.
It's what the bank is forecasting what it's worth. So you can't get that in your mind like, my car's worth this. It's like, no, it's what the bank is saying the vehicle is going to be worth at the end of that 3-year period. Mm-hmm. And now you have the choice to purchase that car or turn the lease in. Those are your choices. So what's cool about it is at the end of the lease, you can look at that residual value. Let's say it's $20,000, and then you can call Marcus. What's my car worth? Well, it's worth $25,000. Great. It's probably a good option if you really want to buy that car for $20,000 to go ahead and get it purchased.
Absolutely, absolutely.
So anything else you want to add to the residual value?
No, I think you covered that pretty well. I think, if you do have a lease and you're looking to check out your options, I think getting an appraisal is a very smart idea for that reason.
Yeah, cool. All right. So when we're talking about the residual, people want to figure out what the car is going to be worth less. I see a lot of people like, well, if I lease the car for X amount a month and then the residual is this, I can buy the car, and they try to do this mathematical formula to pay the car off. It's like, you're making it a little hard, right? What do you think about that?
Yeah, I think when you're trying to predict something so early on, especially right after you get the lease, and you're like, they listed on all the documentation.
It's in writing.
Yeah, it's in writing right at the bottom. It's like, oh, your car should be worth, say, $20,000 by the end of your term, and then you're already trying to plot 3 years before your lease is up, and that can be very problematic because over the last 3 years, we've seen the market jump up, jump down, jump up, like it's crazy out there. So yeah, our recommendation, or my recommendation, would be to at least start thinking about that a year before your lease is up. But right after you get the lease, I think, is a little too early because you never know what's going to happen.
Yeah, the market's moving very fluidly, so we just got to keep our eye on it. All right, let's talk about the money factor. Or for the world out there, interest rates. There's one company I know that uses an actual interest rate on leases. It's Ford Motor Credit Corporation.
Really?
Yeah. I don't know if you've ever seen one of their leases. We could probably call our Ford guy and talk about it, but they still, when they use their calculations, it's got like an APR there. But most leases they're using a money factor. They're the same thing, but they look different on paper. So what's weird is if you do a lease, you're never going to see what the money factor is on the actual lease contract. It's not written on it. But what is written on it is rent charge. So if your payment's $400, it'll have a rent charge of $35. And so that's every month. So you can calculate that $35 times 36 will give you what you're paying in interest over the term of the loan. Have you ever seen that before?
Yeah, I mean, I've seen that on contracts to where, like you're talking about, they have the rent charge that goes into the monthly payment, because on leases, instead of just the payment and interest that you're paying on, you're paying that, you're paying the monthly payment, the interest on that payment, and the taxes on the payment for a lease, which a lot of people don't understand.
Yeah. But
when you're looking at, or for a money factor, you do typically not see that, let's take 0.0219 or
Correct.
whatever they are right now. And most people ask me, well, what's my interest rate? It's like, well, you don't necessarily have an interest rate. You have a money factor, and then I can calculate that into an interest rate.
Yeah, for instance, right now, one of the best rates on one of our programs is 0.00291. So if you write that down, 0.00291. Now, how you calculate what that interest rate is you multiply that times 2,400, and it equals 6.99%. So now here's what we don't know. Why the heck do you use 2,400? I have no idea.
Me either.
Why not 3,500? Why not 28? So any fact checkers out there, if you got that info or data, share it with us, and we'd like to share it with other people. But
Absolutely.
We just know if you Google it, it says use 2,400, and we've always used 2,400, so I don't really know. But that's how you can figure out what your interest rate is on any lease that you're looking at based on the money factor. But you've got to get the money factor, then multiply that times 2,400. That'll tell you what your interest rate is. And on the lease contract, going back to that, the rent charge is what that interest is every month. Multiply that times 36 or however long your lease is. That'll show you exactly how much interest you're paying over the entire term of the loan. That's not negotiable. You can't pay it off early. It is what it is.
Correct.
Now let's get back into the last topic, which is why are lease payments normally lower than purchasing the same car for 5 years?
Yeah.
You want to start this one?
Yeah, well, for starters, it's really because you're only paying for a percentage of the car. When you're purchasing a vehicle over a 60-month term or 5 years, you're purchasing the whole vehicle and then the interest on top of that. When you're leasing, it all depends on, it goes back to the residual we were talking about earlier, but it depends on what that residual is. And then based off of what the residual is, you only pay for typically 30-40% of the car for 3 years. And that's why your payment's typically lower, is because you're paying for less of the car.
That's great. So let's give you a real-time example. I'm going to go to that right here. All right, on this example, it's kind of an extreme example. We're going to use the Tacoma. So a 2023 Toyota Tacoma TRD off-road, which has a window sticker of about $43,428. Now, this vehicle has a residual value. Let's use the percentage first. It's 79% residual. So basically what the bank is banking on is that vehicle will be worth 79% of its original window sticker after 3 years.
Which is crazy.
$34,300 after 3 years. So people, what you're paying for is the difference between the 43 and the 34. So you're only really it's right there. $11,687 is what you're actually financing over 3 years. When you add the interest in, all of this equals about $558 a month plus tax on a $45,000 truck.
Absolutely.
The same truck, if you were to purchase it over 5 years at today's rates, we just had it on the screen. Let's look here. $968. So you can drive a Tacoma for $600 here in Colorado with no money down, or you can buy the vehicle, the same one, and spend
$1,000 a month.
$1,000 a month, to try and get that same truck. So this is why people consider leasing versus buying. And it eliminates all the needs for repairs. Toyota has Toyota Care as well, so they pay for the oil changes and tire rotations.
Yep. Tire rotations first 2 years of 20,000 miles. That's something that a lot of manufacturers are doing now, not just Toyota. I know Honda, Volkswagen, and Toyota all do that.
Yeah, lots of them.
But yeah, because almost every warranty out there is 5 year, 60,000 mile warranty, you only have the car for
3 years.
3 years,
Yeah.
or 36,000 miles on an average lease.
Yeah, that's a great point. You know, like, so Toyota's 336, right? You're driving that car for 36,000 miles. It's got bumper to bumper warranty. If you're going to be driving 15,000 miles a year, you probably can look at different vehicles like Volkswagen. That's why we talk about Volkswagen sometimes, because they have a 4-year, 50,000 mile bumper to bumper warranty. So if you're doing a 45,000 mile lease, you're under warranty the entire time.
Exactly.
And we really like those types of scenarios for our clients.
Exactly. And that way you don't have to worry about, if anything goes wrong in the vehicle, paying out of pocket for something yourself, because it's always under warranty.
Exactly. Now, there's a lots of cons of this. We just wanted to go over those 3 topics today: residual, money factor, and why payments are normally lower. Other than that, we're going to make more videos explaining other little details about it. If you've got questions on it, post it in the comments below. And if you haven't already subscribed to the channel, please do so. Give us a thumbs up and share it with your friends. Also, check out the Backseat Drivers if you like F1 racing and motorsports. And we'll see you next time. I'm Ronnie Haskins.
I'm Marcus Morgan.